Hello everyone, welcome to the channel. I know today is such a big red day. Let's just go over what has happened with a quick market update, and let's go do some technical analysis and find out where the market may bounce or where it's headed in the next week, as we are moving into again one of the very critical weeks for the entire stock market. Alright, if you're new to this channel, please subscribe, like and share this video. Without further delay, let's go ahead. Okay, let's go over the Fed update today. So, what do we have here? Market suffered its worst loss in the entire 2022. We have seen such a bearish market. Even within that, this is one of the worst days in the entire of 2022, with over 4% down on a single day, and the hot inflation report and Fed rate hike fears here. Consumer Price Index data released by the US Labor Department indicated that although inflation likely peaked in July, inflation continues to run above analyst estimates. As you can see, in August we had 8.3% CPI, which was actually down from 8.5% as analysts expected, but the actual estimates for this month was around 8%, which we were not able to achieve. And the fears of central bank raising about 0.75% interest rates when it meets next week on September 21st. There are going to be 2 days of meetings, but on the second day is when they're going to make the call and release the minutes on Wednesday of next week. And also it is followed by Powell's speech. As we all know, it is a huge catalyst. So these are the days that you want to keep a lookout for. Without any further delay, let's just go over some technical side of things as well. Okay, so if you look at the technical chart, we have clearly found some support here where we have initially bounced. We did see a huge rally last few days, the entire week. We were all happy if you're long, right? But we were up about 5%. Okay, so we were straight up 5% without any major or even like a minor pullback. A pullback was clearly there, but this huge of a pullback no one would have expected in a single day. This kind of loss in a single day, usually you may have expected maybe a slight pullback or some consolidation before moving up or down, but that did not happen. We straight back came down. The expected pullback could have been around $400 at least, but even that did not happen. Okay, so we had clearly found a resistance at this point at around 420, which we have clearly drawn, and a huge drawdown that day where we saw over 3% drawdown. Today it was even more, about 4.3%. so this was already a huge level of resistance, and we are in a clear downtrending channel which we have identified before, and also along with the 200 EMA on the daily also might act as resistance. That's what our analysis of market was over the weekend. But this federal news with CPI and all that definitely did escalate things to the downside. Now we are at a critical level at 394. Even if you look at the hourly, we had tried to consolidate at the 400 mark, which was broken, and where we have seen some form of consolidation, but towards the day we just ended up going even further low. Okay, so this again we have to be clearly watching at these levels of lows. Maybe if this can continue to consolidate, because such a huge drawdown today, I do not expect the market to bleed much more tomorrow. Maybe we may see a little bit to the downside, but a little consolidation throughout the entire week in the next 3 days. As long as this holds into next week's Fed meeting, we should be able to have some decision on where the direction might head. We may actually gap up if again the fears of interest rates are taken away by Fed and Powell's speech. If not, if things just go as expected, we may actually even see a further drawdown to these lows. As you can see, the entire stock market was down, all the large caps, all the small caps, everything was down. So yep, just be careful. If you're to the long side, you just want to keep these areas in check. Maybe there could be some form of relief, I wouldn't even say relief rally here, because we were, this is the first day of the downside. We have clearly broken this trend to the downside. Let me just draw. I don't expect a trend to form here. I would probably expect the stock market to SPY to go to at least 388 or something to before it sees another bounce, taking this high out around 411. That's when we may continue. But again, this here, this resistance, this trend line is going to act as a key area of resistance again, even if we make a move up sometime here. Okay, so keep that in watch. Mostly bearish outlook overall, even the economical conditions we are in. So be careful on the long side. Even on the short side, you may never know, but as a trader, you have to capture these volatile moves overall in the market, these huge moves. So trade on the right side. Stay safe, take care, bye.